Tesla faces an investor lawsuit over Musk's tweets on 10% stock sales. Yeah, that's what's happening. Tesla was hit by a lawsuit over CEO Elon Musk's social media posts, including his Twitter poll on stock sales that pulled down its stock prices. Well, if you're Elon Musk, there will always be lawsuits coming after you. So the Tesla founder and CEO has to be very careful with everything he shares. Tesla investor David Wagner called for access to internal documents to investigate whether Tesla and Musk violated an agreement with the U.S. securities regulator and its board members failed to adhere to their fiduciary duties. And this isn't the first time Elon Musk is facing a lawsuit. In 2018, Musk settled a lawsuit by the Securities and Exchange Commission over his tweet on taking the company private, agreeing to have the company's lawyers pre-approve tweets with material information about the company. Tesla shares, which had hovered near record highs, lost their value by about a quarter after Musk said on November 6th he would sell 10% of his stake if Twitter users agreed. He has since sold nearly $14 billion worth of shares so far. So why is there a fuss over Elon Musk's tweets on selling Tesla shares? Let's have a look at what was said. Musk gave his tens of millions of followers the option of a yes or no vote, and he said he would abide by the results, whichever way the poll went. Twitter's poll results display said that about 3.5 million responded, with 57.9% voting yes. So we'd say that the people approved Elon Musk's sale of Tesla shares. After Musk's poll, Senate Finance Committee Chairman Ron Wyden wrote a tweet of his own saying that whether or not the world's wealthiest man pays any taxes at all shouldn't depend on the results of a Twitter poll, and that it's time for the billionaire's income tax. Musk, who's against the billionaire's tax and President Joe Biden's Build Back Better spending, responded to Wyden with a crude retort. More recently, Musk said at the Wall Street Journal's CEO Council Summit that even if you zeroed out all the billionaires, you still wouldn't solve the deficit in the United States. He also cursed about the anti-billionaire sentiment in the U.S. Musk still needs to sell about another 5 million shares of Tesla to fulfill the promise he made in his Twitter poll. Earlier in December, the CEO also sold Tesla shares in batches amounting to about $963.2 million and $1.01 billion worth of stock, bringing his total sold in December to more than $2.87 billion so far. He sold a total of $9.85 billion in Tesla stock in November. Besides Musk, Tesla's executives, including CFO Zachary Kirkhorn, Chief Accounting Officer Taneja Vaibhav, and Senior Vice President of Powertrain and Energy Engineering, Drew Baglino, have also sold Tesla shares and exercised options in December. Maybe that's why some shareholders are claiming disingenuous acts. That begs the question, why would the Tesla CEO and other executives sell off their shares? We have to believe that the sale was bound to happen either way. That's because Tesla CEO Elon Musk faces a tax bill of more than $15 billion in the coming months on stock options, making a sale of his Tesla stock this year likely regardless of the Twitter vote. No matter the results of the poll, Musk would have likely started selling millions of shares that quarter. The reason is a looming tax bill of more than $15 billion. Musk was awarded options in 2012 as part of a compensation plan because he doesn't take a salary or cash bonus. His wealth comes from stock awards and the gains in Tesla's share price. The 2012 award was for 22.8 million shares at a strike price of $6.24 per share. So basically, he gains depending on the stock's closing price. The company has also recently disclosed that Musk has taken out loans using his shares as collateral, and with the sales, Musk may want to repay some of those loan obligations. So investors should probably wait out and see what Musk does after the Tesla stock share sales. In its third quarter Securities and Exchange Commission 10-Q filing this year, Tesla noted that if the price of their common stock were to decline substantially, Mr. Musk may be forced by one or more of the banking institutions to sell shares of Tesla common stock to satisfy his loan obligations if he couldn't do so through other means, and that any such sales could cause the price of our common stock to decline further. So if there's a significant price decline, that's because Elon Musk is selling part of his Tesla shares. The options expire in August of next year, yet in order to exercise them, Musk has to pay the income tax on the gain. Since the options are taxed as an employee benefit or compensation, they'll be taxed at a top ordinary income levels, or 37% plus the 3.8% net investment tax. He'll also have to pay the 13.3% top tax rate in California, since the options were granted and mostly earned while he was a California tax resident. The state and federal tax rate combined will be 54.1%, so the total tax bill on his options at the current price would be $15 billion. Musk hasn't confirmed the size of the tax bill yet, but he said in a tweet that he doesn't take a cash salary or bonus from anywhere. He only owns stock. Thus, the only way for him to pay taxes personally is to sell stock. Since CEOs have limited windows in which to sell stock, and Musk would likely want to stagger the sales over at least 2 quarters, analysts and tax experts have been expecting Musk to start selling in the fourth quarter of 2021. At an appearance at the Code Conference in September, Musk said he has a bunch of options that are expiring early next year, so a huge block of options will sell in the fourth quarter because he has to, or they will expire. Musk, of course, could also borrow more against his Tesla shares, which now total over $200 billion. Yet he's already pledged 92 million shares to lenders for cash borrowing. When asked at the Code Conference about borrowing against such volatile shares, he said stocks don't always go up. They also go down. Musk is still racking up options beyond those granted via Tesla's 2012 pay package. In March 2018, Tesla's board of directors granted him an unprecedented CEO Performance Award consisting of 101.3 million stock options, which were adjusted for the 5-for-1 stock split in 2020 in 12 milestone-based tranches. So as you can see, the sale was already coming. It's not something that shareholders weren't expecting. Now we have to ask ourselves then why some shareholders are disgruntled. Let's go back to the recently filed lawsuit to find out. The lawsuit, which was filed with the Delaware Court of Chancery on December 17th, seeks to obtain records and books related to his tweets, including documents to identify whether the stock sales tweets were reviewed or pre-approved in advance. In March, another shareholder sued Musk and its board, accusing him of violating his 2018 settlement with the SEC and exposing shareholders to billions of dollars of losses. Now, according to the shareholder, there's some foul play surrounding Musk's Tesla stock share sales. This suit indicates that it is unclear who at Tesla, if anyone, is currently reviewing Musk's tweets after its last full-time general counsel left in December 2019. And the most recent acting general counsel stepped down in April. The complaint seeks internal files from Tesla under a Delaware law giving broad inspection rights to shareholders who credibly suspect corporate wrongdoing. Records cases often reflect an attempt to drum up fiduciary breach claims. The suit also says that there's a credible basis to believe that Tesla is, among other things, being mismanaged. It further states that Musk remains undeterred and continues to post on Twitter and social media on matters that are material to Tesla and its shareholders, and which ultimately have an impact on Tesla's stock prices. Well, if you're as influential as Musk, everything you say will always affect the market. Nonetheless, we'll just have to wait and see where the suit leads us. Feel free to share your opinion via the comments section. Don't forget to like, share, and subscribe. See you next time.